Hey guys, I know Gary Gensler is supposed to be testifying on the floor at some point today, so I'm going to try to see if we can catch that. I was going to put together a video real quick, but I saw this. I wasn't even aware it was happening today, and I figured we would just jump on here real quick and see what Gary's talking about. I'm going to mute my mic and just check it out.
And again, my part of this. As this hearing is fully virtual, we must address a few housekeeping matters. For today's meeting, the chair or staff designated by the chair may mute participants' microphones when they are not under recognition for the purposes of eliminating inadvertent background noise. Members are responsible for muting and unmuting yourselves. If I notice that you have not unmuted yourself, I will ask you if you would like the staff to unmute you. If you indicate approval by nodding or some other strange gesture, please let us know. Staff will unmute you at your microphone. Unmute your microphone. I remind all members and witnesses that the 5-minute clock still applies. If there is a technology issue, we will move to the next member until the issue is resolved, and you'll retain the balance of your time. You will notice a clock in your screen that will show how much time is remaining. At the 1 minute, the clock will turn to yellow at 30 seconds. I will gently tap the gavel to remind members that their time has almost expired. When your time has expired, the clock will turn red and I will begin to recognize the next member. In terms of the speaking order, we will follow the order set forth in the House rules, beginning with the chair and ranking member. Then members present at the time the hearing is called to order will be recognized in order of seniority. And finally, members not present at the time the hearing is called to order. Finally, House rules require to remind you that we have set up an email address to which members can send anything they wish to submit in writing at any of our hearings or markups. That email address has been provided in advance. This afternoon, we welcome the chair of the Securities and Exchange Commission, Gary Gensler. Mr. Gensler, thank you for being here today. The SEC protects investors, helps secure our markets against fraud and manipulation, and promotes capital formation. And like most federal agencies, its work has changed in profound ways because of the pandemic. I'd like to briefly mention 4 areas where we hope to gain insight into the SEC's recent activities and future resource needs. This information will be vital as we get started in earnest on crafting this year's appropriation bills. First is the issue of emerging financial technologies. The market for non-fungible tokens, cryptocurrencies, and other digital assets has exploded. While these have created significant wealth and value, these markets also feel like a virtual Wild West. They have led to extreme market volatility, theft, pump and dump schemes, and other issues that hurt retail investors. I look forward to learning more about the work the SEC is doing in cooperation with other federal agencies to help bring more order to these markets. Second, we are not just seeing innovation in financial products. Technology is also driving new market trends that warrant scrutiny. For example, Chair, I know you recently testified on the issue of GameStop, and the SEC is investigating issues relating to the trades of GameStop on the financial platform Robinhood. I hope to hear more about how the SEC can preserve the rights of retail investors as it grapples with the market impacts of new technology like mobile apps, decentralized finance, and artificial intelligence. Third, as a strong proponent of transparency in and out of government, I am heartened to see the SEC make progress on climate issues. There is widespread interest from both companies and consumers and the new administration in increased disclosure of environmental and climate risk. I welcome both the increased regulatory and enforcement efforts in this space. I'm also a firm advocate for increased political disclosures and will continue my work to provide the SEC the resources and authorities it needs to address this pressing issue. Finally, the pandemic has accelerated many of the trends of recent years, from digital adoption to geographic migrations. Unfortunately, one of those things is income and wealth inequality. It is a testament to the resiliency of the American economy and people that our markets were able to quickly stabilize and then grow after the start of the pandemic. That also made the richest Americans much richer, even as many low-income areas and communities of color face setbacks that will push off financial prosperity for years to come. It's not enough just to make sure markets work. They need to work for everyone. I look forward to working with the SEC and the administration to address this growing disconnect between Main Street and Wall Street. Chair Gensler, I realize that the SEC shares jurisdiction of these issues with other agencies that this subcommittee oversees, including the Department of Treasury and Federal Trade Commission. We also welcome your comments on how we might be able to facilitate more cooperation with these agencies and other parts of the federal government to ensure that you can work most efficiently. Before I turn to the chair for this statement, I would like to recognize our ranking member, Mr. Womack, for his opening remarks.
Thank you, Chairman Quigley, and welcome to the committee. Chairman Gensler, congratulations on your confirmation. We look forward to hearing from you today. The SEC plays a critical role in protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation, all while overseeing approximately $100 trillion in securities trading annually in U.S. equity markets. I believe it's important to build on former Chairman Clayton's efforts to improve the investment experience for Main Street investors. It's also critical that the SEC helps to facilitate the formation of capital for American companies, and more so now as the economy recovers from the pandemic. We must promote a market environment that is worthy of the public's trust. I'm concerned with cyber threats to both SEC systems and market participants, and I'd like to learn how the SEC is managing these threats. Despite the efforts of my chairman there, I'm a bit concerned about the SEC getting involved in areas that are a little outside its core mission, such as climate change and political spending. The EPA is the primary federal regulator for climate change. The FEC is the federal regulator for campaign spending. I don't believe the SEC should be using its authority over public companies to require costly and ideologically based disclosures that do not provide material information relevant to making investment decisions. Instead, I believe the SEC should focus on helping the American economy recover. I'm also disappointed with the administration's new executive order on climate change and financial risk. The order will have far-reaching impact on the entire financial sector, consumers, investors, and federal loan and procurement policies. Such sweeping policy changes should not be addressed unilaterally by the administration. Regarding the work of this committee, because of the administration's delay in submitting their fiscal 22 budget, we aren't able to discuss the details of your resource needs for next year. However, as the appropriations process unfolds, I'm going to pledge to work with Chairman Quigley to make sure you have an appropriate level of resources to complete your important core mission. With that, I yield back my time.
Thank you, Mr. Womack. Thank you, Chair Gensler, for being here today. Without objection, your full written testimony will be entered into the record. With that in mind, we ask you to please summarize your opening statement in 5 minutes. Please begin.
Good afternoon. Thank you, Chairman Quigley, Ranking Member Womack, and members of the subcommittee. I'm honored to appear before you today for the first time, and I hope I'll be seeing you again in the future as Chair of the Securities and Exchange Commission. Thank you for inviting me to testify. Before I begin, I'd like to note that my views are my own and not speaking on behalf of the fellow commissioners or staff. That's a standard language that you've probably heard in the past. This subcommittee oversees many government agencies, and I appreciate the opportunity just for a moment to describe our activities at the SEC. And having just started 1 month ago, I'd say I've just been struck by the sheer breadth and scope of the capital markets the agency work. As Ranking Member Womack said, we oversee nearly $100 trillion capital markets at the SEC that affect every American. The $50+ trillion debt markets are how we fund our federal government, our local governments, how corporations borrow money, and how construction of a hospital down the street gets financed. Our $45 trillion plus public equity markets, which gets most of the attention, connects Americans looking to invest with public companies seeking to innovate, grow, and create jobs. Our multi-trillion-dollar private equity and venture capital markets, somewhat the shiny object of much around the globe looks to innovation and helps and plays a significant role, particularly in venture capital. So how does our agency fit into all of that? Congress laid out the SEC's three-part mission, as the chair mentioned and the ranking member, to protect investors on one side, facilitate capital formation on the other, and then I think in the middle that connects those investors and capital formation, fair, orderly, and efficient markets. Our responsibilities at the agency oversee 28,000 registered entities, 3,700 broker-dealers, 24 national security exchanges, 7 clearinghouses. You get the picture. 2,300 filings come in a year from self-regulatory organizations that need to be reviewed. Each day, I will be animated by working families. Our capital markets help Americans save for retirement, borrow for mortgages, and prepare for the bumps along the way. And the SEC and Congress's support of adequate resources for the agency are a real part, I believe, of America's economic success these last 90 years. In the last 5 years, the scale, scope, and complexity of our capital markets have continued to grow. A record 67 million families hold direct or indirect stock holdings, and that's in 2019. The number of private equity funds have increased 58% just in the last 5 years, and the venture capital funds I mentioned, 110% increase in 5 years. In the midst of that, the SEC has not grown to meet the needs of the 2020s. Between fiscal 2016 and 2020, our staff decreased about 4%. So we've been flat to a decrease. In my written testimony, I highlight a number of additional trends that we're seeing. First, we're in the midst of a once-in-a-generation wave of traditional initial public offerings. And in addition to that, when I say once in a generation, more than the dot-com boom of 2000. But in addition, you may have heard something about blank check companies called special purpose acquisition companies. And there we've seen already today 700 filings, 300 completed transactions, and that compares to only 13 5 years ago. A second big trend is that trend I mentioned about private funds. A third trend is that which the chair mentioned about crypto assets or digital tokens. And the first, Bitcoin, we've all heard about, but there are over 80 other tokens that have over $1 billion market cap right now, and 1,700 that have over $1 million. In my written testimony, I also highlight some topics that were raised here: financial technology, data analytics that will help and also stretch our resources. I hope to be able to work with you on the resources that we can tap into new data analytics. And while the commission is an appropriated agency, I would just mention before I close, we are funded by fees. You might remember this Section 31 fees that we collect on securities transactions. So we sort of cover ourselves. A well-funded SEC helps us better serve the American public and stronger investor protection and efficient markets. I look forward to working with Congress and this committee. I thank you. I look forward to your questions.
Thank you so much. Let me begin talking about cryptocurrencies. We talk about mission of agencies, but the world is changing. In fact, the world is changing in front of us while the scenery behind us changes. It seems sort of dizzying at times. From a regulatory perspective, many cryptocurrencies are treated as commodities, but in practice, they're characteristics of currency and securities. So do you think the current regulatory categories are sufficient for oversight? And do you see value in the creation of a new regulatory category?
I thank you for that question, Chairman. I think that there's gaps in our current system. You're right to say that there are many crypto tokens that do come under the securities laws, and our agency is trying to enforce the laws. But there's thousands of tokens, and we've only been able to bring 75 actions. And there are others currently that are non-compliant. But I think the bigger gap is around what's called exchanges, crypto exchanges. And I would think if we could work with Congress to try to bring investor protection to the platforms where these sometimes commodities, sometimes securities are trading on the platform.
And for those watching, Chair, while you finish your answer on that, could you explain what your concerns are, what the abuses that can take place involving these new currencies?
Well, without a cop on the beat and some rules of the road, then market participants can front run your orders. If you placed an order on an app and you said, all right, I want to buy a stock, there are rules to protect you that somebody won't use your order and get ahead of you. And we at the SEC try to protect against fraud and manipulation. Not so in the crypto world. And so it's trying to bring the similar protections to the exchanges where you trade crypto assets as you might expect at the New York Stock Exchange or NASDAQ.
In your work with the other agencies as you started, like Treasury and the Futures Trading Commission, do you think that you're able to clearly split jurisdiction with these agencies so far? And are there gaps in that regard as well?
Well, I'm just in my second month on the job, but I've had some really good conversations with both agencies. I think that working particularly with the CFTC to ensure that we cover the markets, that the investing public is protected in these crypto assets. With Treasury, they're keenly focused on anti-money laundering and guarding against illicit activity. And where we can augment and support their efforts, I look forward to that. Our remit about investor protection, we might need a little help from Congress as well.
Yeah, look, final question for this for now. You're regulating some extremely well-financed entities, and as we've said, it's a complex world now. Are you able to attract the level of skilled personnel that you need, and what are the challenges you face in that regard?
I've been very impressed with the career staff at the agency, but you're right, it's always a challenge, and we'll talk about technology in a bit as well. We only spend about 16 or 17% of our budget, about $325 million a year on technology, which is less than probably some large firms spend in a month, or some of them even spend that much in 2 weeks. So we're nimble and we're efficient, but we're under-resourced compared to some of the big players in finance.
No, I think some of these entities' marketing budget dwarfs yours, but I have every faith in your force, and I appreciate their work. I'm going to yield back and recognize Mr. Womack.
Thank you, Mr. Chairman. Once again, Chairman Gensler, welcome to our committee. As I said in my opening, uh, I'm not sure that it's appropriate to use the SEC and its authority over public companies to require costly and burdensome disclosures that don't necessarily provide information relevant to making investment decisions, and particularly the impact of the administration's new executive order on climate related financial risk. I know that some investors want the information, but that doesn't necessarily mean that the SEC should require its disclosure from every public company. So I got 2 or 3 questions along that line. Chairman, do you believe the climate information is material simply because of its interest to some investors?
Well, I think that you and I share a view that the disclosure regimes are about investors, and that's been the heart of the capital market reforms of the 1930s until now. And what we're finding is there's literally trillions of dollars of assets under management that have asked for and want to understand the climate risks, both the underlying physical climate risk and also the transitional as companies are moving forward to address their own risk in that area. And so as investors are looking for that, we as an agency can help bring some comparability to the disclosures, some consistency, some reliability to those disclosures. But I think we share this view. It's investors and what investors are looking for to make their investment decisions.
Do you think that this kind of information is relevant to every investment decision?
I think that it's the test and as I understand it is, do reasonable investors find it significant to their investment decisions? And so we're going to go out, and I've asked staff to prepare something for the 5-member commission, do the economic analysis, and then put it out to notice and comment and hear really from investors and the broad public as to what is relevant, what metrics, what disclosures are relevant to their investment decisions.
And so in that particular matrix, the cost to the public companies will be analyzed, I assume.
Right. I was actually a professor of global economics and management up at MIT. I really deeply believe in economics. So we'll have economic analysis, both at the proposal stage, but also ask the public, share with us the economics as well.
And along this line, the last question is more about the impact that the executive order could have on companies from going public. Is there a concern that this could be some kind of a barrier to companies going public?
Look, I think you raise a good point. We have both vibrant public markets. I mentioned $40 to $45 trillion in size, about 4,500 companies. We're at an all-time peak of companies trying to tap the public markets, but we also have private markets. And it's usually about the stage of the company's development. The disclosure regime for public companies in many instances are more than in private companies. This disclosure regime that we'd be looking to put out for public comment on climate, I think many investors are looking for, and as I say, to have some comparability, consistency, and reliability.
Good. We're going to have several, I'm sure, budget-related questions here today. So I'm going to follow the lead of my chairman and yield back some of my time so that we can get to the questions of some of our other members. Chairman, it's great to see you, and welcome again to our committee. And I appreciate your time today.
I thank you. I thank you for the call earlier this week as well.
Thank you. Mr. Cartwright.
Thank you, Mr. Chairman. And Chairman Gensler, nice to kind of be with you today. Thank you for joining our hearing. I will say I agree with you that many investors do find it relevant, climate-related information with publicly traded companies. Just because some may find it irrelevant doesn't mean others don't find it relevant. So I agree with you on that. I wanted to talk to you about what we call the Consolidated Audit Trail, the CAT. In 2010, the Securities and Exchange Commission directed the self-regulatory organizations, the SROs, comprised of the securities exchanges and FINRA, the Financial Industry Regulatory Authority, to develop and implement a consolidated audit trail, the CAT, that will enable regulators efficiently and accurately to track all orders in U.S. equities and listed options and conduct cross-market surveillance. Now, when fully implemented, this CAT will be the world's largest database of equity securities and listed options transactions, and it will maintain customer personally identifiable information on over 100 million institutional and retail investors. Last year, former SEC Chair Clayton testified before Congress on June 25th, where he acknowledged that the bulk downloading of CAT data by each of the SROs is a complicated problem, and that the SEC is still evaluating internal risk controls and other potential threats. And shortly after his testimony, the SEC did issue the CAT data security proposal that is designed strictly to curtail bulk downloading by the SROs and otherwise significantly enhance the security of data within the CAT. That proposal is still pending before the SEC. So Chair Gensler, when do you expect the SEC to act to adopt that proposal?
I thank you, and I share your goal to protect the data. I think that Chair Clayton also did some things which they did finalize to remove some of that personal identified information, people's birthdays, social security numbers, and the like from the data that was completed. But I'd like to, I'm only in my second month, I'd like to work with you and your staff to reply to the second question about the timing of the FINRA. I think has that second, the bulk data in front of us, and I could better reply the timing of that as a follow-up.
Okay, and I'll ask you this, and the same answer will be appropriate. We'd rather have a correct answer a week from now than something wrong off the top of your head today. Chair Gensler, I also understand the SROs, as the sole operators of the CAT, have proposed to strictly limit their liability in the event of a CAT data breach or misuse of the CAT data by the SROs or their employees. This would have the effect of shifting all liability to broker-dealer firms reporting to the CAT in the event of a CAT breach, even though those firms have no control over the CAT or any security measures it may adopt. How does the SEC plan to address this issue?
Again, I think I need to sort of understand from the staff a little better how to address it, but I share the concern that you don't want to sort of put it all on the burden of the people sending the information in, that the aggregator, in this case, FINRA and the operator of the consolidated audit trail, has a responsibility as well.
Well, we will follow up with you, Chair Gensler, on that, and I thank you for your answers and your presence here today. I yield back, Mr. Chairman.
Thank you. I believe that Mr. Joyce is next in line.
Could you defer, if you don't mind, Mr. Chairman, to Mr. Stewart?
Certainly. Okay, Mr. Stewart.
Yeah, thank you. Thanks, Mr. Joyce. And Chairman, thanks for being with us. I almost have too much, to the point where I almost don't know where to start. And I guess I would just come back and ask you to define a little bit for me, or to maybe explain a little bit some of your thinking regarding and Mr. Womack alluded to this or talked about this briefly. But could we discuss primarily this idea of requiring more information, whether it's in the environmental area, which is, I know, the focus that some people have concerns about. But I'm wondering, well, if we're going to expand the reporting requirement in some of the environmental concerns, are there other areas that we should require additional reporting as well? Would we only want to limit to environmental concerns? Are there other areas that you think probably need to be reported as well? And do you have any estimates of the cost and the economic burden or the regulatory burden that would entail?
First, let me say, if the 5 minutes isn't enough, I'm glad to meet with you next week or any time that we can mutually figure out. And I'd make that offer to all the members of the committee. But in terms of disclosure, I think that each period of time we should be animated by investors. So what investors might have wanted in the 1960s might be different than the 2020s, which might be different than the 2030s. But right now, there is significant interest from investors to understand climate risk and from the issuers, and to bring some consistency. A lot of companies are doing this voluntarily, and there's a little bit of differences of what they're reporting, so it's not comparable either. Secondly, I think we are going to take up, I've asked staff to make recommendations around human capital. The value of a company is often very entwined with the employees, their turnover, where they're located, the pay levels and the like. And so that is a second area. I've asked staff to serve up something for Commission on climate risk disclosure and human capital disclosure. We are thirdly considering something around cyber protection, and a number of members have already asked about cyber, but just how issuers are looking at and how they're ensuring for their own cybersecurity.
So, and by the way, I don't oppose this effort necessarily. I want to be candid with people about the cost, and I want to be candid with them about my concerns about regulatory burdens that it would entail. But I think more of a philosophical conversation about, if we're going to require it for some climate concerns, would we want to include some for social justice concerns as well, which is something that many people are equally concerned with? And if we open it to that, are there other things that we may regulatory require? And Commissioner, Chairman, you bring up something really quite interesting. You said that a lot of companies are interested in this. Why not let the market drive that? If this is of a particular interest to an investor, why not let the market drive them to those companies who disclose this, rather than through regulation require that every company have the equal burden, when some of them, or some investors may be sufficiently satisfied by having the market and allowing them to move to those organizations that do report on these things.
I think it's a very good question. I think it's embedded in a debate about when some standardization, so you can have comparability and you can see across the issuing. We have about 4,500 public companies, and you're right that it might be more relevant to some than others, but to have comparability across the ones that report. And I think that this is enough investor demand right now that then the SEC has a role, just as the SEC stepped in and required over the decades management discussion and analysis, or a risk section itself. The SEC of the 1930s was looking at financial disclosure, but by the 1990s, it included some risk assessments and some management discussion and analysis, even disclosures around executive compensation. So I think in the 2020s, this is an area that a lot of investor demand is there, and we can bring some comparability and some reliability to that reporting.
Well, and again, I don't just in a broad way oppose this. I just want to be very open about some of the concerns and costs. And the last comment, and my time has expired. But you're right in the sense too that let's have compatibility. Let's have them be standardized. But that's different than requiring that of every company. But again, my time has expired. Thank you, Mr. Gensler, for being with you. Thank you, Chairman, for hosting us today.
Thank you, Mr. Stewart. You asked good questions. While we may disagree on issues, the discussions are particularly helpful to have in the Atticus Finch School of such things. You walk around in the other person's shoes to understand them all.
Thank you, Chairman.
Mr. Pocan.
Thank you very much, Mr. Chairman, and thank you, Mr. Gensler, for being with us. If I appear distracted, 15 seconds ago, they just started actual voting on a markup I'm in on another computer. So I'm waiting for a text if I have to fly away. I apologize. As you've emphasized, the SEC's role is to protect ordinary investors by ensuring a fair and transparent marketplace. Private equity firms play an ever larger role in our economy, often to the detriment of workers and communities. While most ordinary investors are not directly invested in private equity, they may be exposed to risk posed by private equity through their pension funds or other investments. And yet private equity funds are not subject to regular disclosure requirements that other types of investments are. A couple questions. Would it be beneficial to investors if they had access to information about private equity firms' practices, fees, and performance information so they can assess whether or not to invest in such firms? And do you think it might be material to an investor if a company uses private equity type business practices like buying up small companies, loading them up with debt, and selling off their assets?
I thank you for that question. I think, as I mentioned in my prepared testimony, the private equity space has grown significantly. I think it was close to 60% just in the last 5 years. And that's number of funds, not just dollars under management, which I think have grown even more. And the transparency there, I think, is something that can be enhanced, particularly between the investment manager and their investors. And as you're right, you said the investors are often pension funds. So I've asked staff to just try to understand that a little bit more. There's some things where you can enhance the disclosure to the SEC through what's called a Form PF or private fund, and some other regulatory filings, but also this relationship between the asset manager, usually a general partner, and the investors, limited partners, which are often pension funds, and best organizing that.
Great. No, I appreciate that. And in your testimony, you mentioned that I think you said your staff has decreased by 4%. At the same time, you give that and the other statistic of increases. What resources do you need from Congress to ensure adequate oversight, especially in the private equity sector?
Well, I'd like to work with this committee and of course, the whole Congress to get more resources. I don't want to stand in front of the president's budget, and I know it's a little awkward that I'm here, a few days before OMB is released. But I do think that we've shrunk about 4%, and we should at least try to make that up, given the incredible growth and complexity of the markets.
Gotcha. And then you noted in your testimony that changes in private fund strategies, structures, and business practices have created new risks for markets and investors. Can you just talk a little bit more about what some of those newer risks are?
Well, some of the newer risks are even involving what we talked about earlier, crypto. There's some interest in funds investing in the digital asset and crypto space. And then it's also some of the mechanisms that the sponsor is trying to earn fees from the portfolio companies. This was highlighted about 8 years ago in a speech at the SEC, but sort of really looking about how that disclosure and how that relationship works between the general partner, the advisor, and the investors in their funds. And that there are some general partners that have asked their limited partners to sign agreements to say there's no fiduciary duty between the general partner and limited partner, which is sort of wasn't the way it was when I was growing up in the financial world.
Great. And in less than a minute, I'm not going to try to ask you questions about stock buybacks. We'll submit a question series on that. But I'm not familiar with the special purpose acquisitions you talked about that are relatively new. If you have any good information on that, could you share that with us? I'd love to learn a little more about those.
I'm glad to send it. It's basically a company that has no operations and raises money from the public, thus blank check, and then says we have 2 years to take the money you just gave us to find a target and to buy a target. And then when they find the target, sort of take that company public. They've just taken off like, might say wildfire in the last 6 months, and there's hundreds of them, as my testimony said. And there's some real questions about who's benefiting, and investor protection.
Great. Appreciate that. Thank you, Mr. Chairman. I yield back.
Thank you. Mr. Amadei.
Thanks, Mr. Chairman. To you, Chairman Gensler, I'm gonna go ahead and take you up on your gracious offer that you enunciated during Mr. Stewart's questioning about we'll hook up with you later instead of trying to see if we agree on religion or politics in 5 minutes or less. And Mr. Chairman, I never like to publicly disagree with you on something, and so I will agree with you that perhaps Mr. Stewart's questions were okay, but the camera angle was all wrong on that, in my humble opinion.
Well, I
Mr.
saw
Chairman.
somebody cut him off. I was concerned.
I'm like, obviously, there's got to be some law in Utah for doing what he just did abundantly in the record. And with that, I will yield back, Mr. Chairman.
I look forward to meeting you in another time and moment, whenever you want, by the way.
Yeah, Chair, I want you to call me when you finally realize that you regret making that broad offer. But I recognize Ms. Lawrence.
Thank you. This is quite an interesting hearing. So I want to say, Chair Gensler, you have so many things on your plate, and I want to bring up one that probably a lot of attention is being given to. Yesterday marked the 1-year anniversary of George Floyd's killing, calling for greater attention to systemic racism and investors demanding companies to do more to advance racial equality. For change to truly be realized, companies need to take a look at their own internal processes. Study after study demonstrates that diversity and inclusion is correlated with the company's profitability and performance. Has the SEC issued any new rulemaking or advisory opinions on this topic recently? Does the SEC plan to prioritize this issue in the coming months?
I thank you for that, Congresswoman, and the tragic loss of George Floyd is on all of our minds, and we have so much more to do as a nation to address, as you said, systemic racism. At the SEC, I have asked staff to take up, as we look at potential disclosure regime for human capital, to include in that diversity of senior management and diversity at companies. And at the SEC itself, I'm looking closely, not only in the hires that I can affect in the senior leadership team, but everything that we do at the agency, that everybody can bring their selves to work and be their best selves, regardless of race or gender or national background, sexual orientation. But this week's 1-year anniversary is a real moment to reflect. I think that we've got so much work to do in this country.
Thank you. I look forward to your leadership. You have mentioned that new technologies like Robinhood and other mobile apps increase access to capital markets, but present new policy questions. What can the SEC do to ensure that users of such apps are knowledgeable about the risks of trading and investing? And what comes to mind is that if you enter into these applications, there is a disclaimer or warning that will go to the user.
I think you're right. I mean, one of the challenges, and we see this throughout our economy, is that when we use applications, I mean, I'll admit it, I don't always read the fine print and the detail. How can I in such a small device? And so they've brought greater access, much greater access, but at the same time, in the financial world, they're leading to greater activity. And in some places, it's okay. It's okay if, for instance, a streaming app knows that I'm kind of a rom-com guy, and I am. And so I might lose 90 minutes watching a movie. By the way, my favorites you can ask me about privately. But if you trade too much on a mobile app, economic studies show you probably have lower returns. And so I've asked staff, we're going to put out to comment to get advice on the use of behavioral prompts that move folks to move and trade more often. Investing is a good thing. We want to encourage investing, but its question is whether it's this day trading and things like that, or opening up a margin account or an option account when you don't, as you say, fully been informed about the risks of these accounts.
Thank you for that. And since everyone else is asking for some personal time, I just feel compelled, Mr. Chair, to ask for a personal one-on-one. I don't want to be left out.
Yeah, oh my God, Chair Quigley, you're right. And my wonderful head of Ledge Affairs, Kevin Burris, is going to be upset with me after this hearing.
I think he was upset when he heard it. All right, live and learn. Ms. Lawrence, are you through?
I yield back, sir. Thank you, Mr. Chair.
Very good. Mr. Joyce, do you wish some time?
Yes, thank you, Chairman Quigley. Chairman Gensler, I would just like to come when you have Amadei in. I don't even want to question. I just want to watch that. Can you hear me?
Yeah, I can hear you.
I want to follow up a little bit on what Ms. Lawrence was talking about in the aftermath of the January, the volatility with GameStop. I've heard from many individual investors here in Northeastern Ohio who are concerned that retail investors do not share a level playing field with large institutional investors, particularly in this rapidly changing market. And I appreciate, I know you have a team that's studying that. Can you preview any of the overarching takeaways they've gathered so far?
So I think that you're you know, like so often the voters are smart. I think what they're raising with you in Ohio is that it's not always a level playing field. That's what we're trying to ensure. So our current equity market structure, if any one of the 10 or 20 of us that are on this call were to enter an order into our mobile application and say we want to send a market order to the market, by and large, that doesn't go to the big stock exchanges we know, like the New York Stock Exchange or NASDAQ. By and large, that is being bought through something called payment for order flow by financial firms that are wholesaling those trades. Well over 90% of those transactions are flowing through the markets to a small handful of firms. And so are they really getting best execution? As I say, is best execution really best execution? And you know, brokers handling things, so there's a rule that says best interest. Is best interest really best interest? And conflicts have existed in the financial market since antiquity. This is not new, but it's how we sort of address that, what we address through disclosure, and what we address sometimes through saying, no, there needs to be rules to ensure more. So I think we will be doing some things around market structure in the stock market based on what we learned in January in those market events.
Well, that's good to hear, and I look forward to that, sir. I was excited about the SEC's announcement in November on its final rule changes to harmonize and improve an exempt offering framework that was outdated and burdensome for entrepreneurs and investors alike. I'm hopeful that this simplified framework will facilitate access to private markets for more investors and help small businesses with their capital formation. Is the SEC still committed to the smooth implementation of the policy adjustments and similar regulations which improve private markets for investors and help small businesses grow?
We're committed to formation of capital for small businesses. A little bit about myself. Neither of my parents went to college, but my dad took his mustering out pay out of World War II, which was $300 in those days. And he started a small business, a vending business. Never had more than 35 employees in Baltimore, but it sent all of us 5 kids to college. So I'm a product of small businesses. He didn't tap the public markets, but his bank did. I know that, you know, and when he needed some money, and the 400 bars that he had cigarette machines and pin games and bars. You know, small businesses in my blood.
Well, that's good to hear. Thank you for your time today, sir. And Mr. Chairman, I yield back.
Thank you. Ms. Torres.
Thank you, Mr. Chairman and Chair Gensler. Thanks for coming to our committee today. As a regulator, I applaud your efforts to focus on competition and consumer protection. My questions are about the effect of consolidation and conflicts of interest in the nationally recognized statistical rating organizations NRSRO system. In 2020, there were 9 NSROs operating, but the 3 largest controlled 95.1% of the market, an issue that will likely exacerbate market consolidation is when large NRSROs buy up the companies and provide the data needed for developing ratings. So has your office examined the potential impacts of large NRSROs controlling access to the data on which others must rely?
If I might just generalize a little, because I'm only in my second month in the role, but I think you raised an important point about data, not just for credit rating agencies, but elsewhere in the financial market, that we found in our modern 2020 economy, the data is so valuable, as you mentioned, and the concentration of data. I think we're seeing that in the market making, even in the events in January, which we talked about earlier with other members of the committee. There's a concentration of market making. And as you're right, there's this concentration in credit rating, where there's the 3 big ones that have 95% of the market. We examine and we oversee these credit rating agencies, but I think the point about data and the concentration, not just there, but elsewhere in the capital markets, is one that we'll be studying and potentially suggesting enhancements in our rule sets.
I hope that you will report back to our committee any of your findings that you have so that we are able to work with you on this really important issue. Another question is 11 years ago, Dodd-Frank attempted to mitigate conflicts of interest in the securities market surrounding NRSROs. In the following years, experts have urged the SEC to end the issue pay business model that dominates the industry. This business model allows issuers of securities to pay credit rating agencies for ratings, which has led to inflated ratings. That SEC has never fully addressed conflicts of interest. So has the SEC considered countermeasures to reduce conflicts, such as the implementation of an independent rating mechanism?
You're right to raise this. The SEC has considered, but it feels like it was a number of years ago, Congresswoman, in some reports it published in, I think, 2013 or 14. The interesting historical note is that it wasn't always this way. Credit ratings actually were subscriber-based and through the 1960s. Now, a lot changed since the 1960s, of course. But the 2008 financial crisis, at the heart of that crisis, was some of these conflicts were really reared their heads. And so Congress asked for a report. The SEC did that. As I said, it was about 7 or 8 years ago. I've asked staff, can we take a fresh look at that and just understand if there's further modifications to be done?
Chair Gensler, thank you again for coming to our committee. I urge you to, put all your attention to these issues, and I welcome an opportunity not to continue our discussion in a private setting, but in a public setting. So my constituents and all Americans that depend on these credit rating agencies can fully inform themselves of the issues that we have. Thank you, and I yield back.
Thank you. That completes the first round. I think we'll do something of a modified second round if someone has a few questions. And the reason I said that, Mr. Womack, you mentioned that you might have an additional one when you spoke before.
Yeah, I just want to ask, and probably a bit unfair to ask the chairman about the impact of COVID. But I do know that particularly and I'm sure we all have companies that have done a lot of telework as members of Congress have. I understand the SEC will spend about $100 million on rent this fiscal year. But because of the pandemic, most SEC staff have been teleworking for more than a year. Chairman Gensler, dive down on that subject just a minute. What have you heard? What have you learned in your conversations with staff about impacts of COVID, staff production, and whether or not we're going to see an emphasis within the SEC, as we have in a lot of companies, and I've got some big ones in my district, that teleworking has worked for them, and there will be an expectation that that model is going to be prevalent going forward. Help me understand that concept from the SEC perspective.
No, it's a very good question. First, I would say too many staff and even myself have lost family members to COVID. So I think first that's what I'm hearing, and that's been hard. But in terms of the SEC is right, it went mandatory remote in March of last year and is still mandatory remote. And what we found is the productivity has been pretty high. There's some challenges. Don't get me wrong. There's some challenges, particularly for new employees, and that certain communities aren't built in the same way. We are already thinking about, and we'll be working with the bargaining unit as to how we might expand telework. But there's been most definitely, even in my 6 weeks, employees are saying, can we, as we come back into our 12 regional offices in DC, can we look to expand that? If we do that, I think you're right as an appropriator to think it might lower the need in square footage. And this would be over the multiple years, because leases don't come up, every month. But I think that there's some possibility there in terms of square footage.
Yeah, so there could be some savings down the road, but I would agree with you. It's probably a bit premature to determine what the final outcome is going to look like. But I've heard from some of my larger companies that business as usual before the pandemic is probably not going to be the way forward for the next few years, that they're going to continue to experiment with that and reduce travel, a lot of travel costs associated with it as well. But anyway, that's all I have, Mr. Chairman. Chairman Gensler, thank you again for your time today. And assuming after you meet with Mark Amodei and are still wanting to be the chairman of the SEC, that we'll have an opportunity to visit face to face very soon.
I look forward to it.
Inquiring minds want to know. Before I go, Ms. Torres, do you have a follow-up question at the end? Okay, then, Chair, let me just ask you one more. I know climate disclosures were raised. Do you have a guesstimate on when SEC might proceed to rulemaking relating to standards for disclosure on climate and environmental risk? And how long do you expect the process to take?
Well, the process, we have an open comment file right now where it's not a rule, but it's my predecessor, Acting Chair Lee, had put out some questions. We're going to take that into consideration. That's open until June 13th. Of course, if any members or the public want to put something in, we're going to try to look at that and then turn that around and put a proposal out. But I don't want to, I've already made one commitment to meet with your members, so I don't think I want to make a commitment exactly what month but we want to turn around these comments that
we want to know when you're going to do public hearings in all 435 districts.
I'm not going there, sir. But I do think that this is an important set of matters, and to do it right, to get the economic analysis, to consider the comments that are coming into this file, we'll get a proposal out, and then based upon that, rulemaking usually is in multi-stages. A final rule you wouldn't expect to be during the next 6 months, because we have to turn things around, and then we turn things around. But I think I'm be better advised by staff not to try to commit to a specific month, but we'll move expeditiously on this and human capital disclosure as well.
Okay. I'd ask the ranking member if he has anybody else on his side or if he has any closing remarks. He does not, so I was tempted to open the floor to Mr. Amade and Mr. Joyce for further abuse, but have declined to. Chair, this has been a great discussion, but we really appreciate your willing to take on this task and your openness, foolhardy or not, to be so gracious with your time. Now, we do appreciate that and the very serious issues that we're talking about today. So I thank everyone for participating, and this hearing is now adjourned.
Thank you.